Hey everyone, welcome to the best U.S. Mint News channel on YouTube. I'm sonofasilverstacker. Today's date is the 21st of July, 2025. In this video, we're going to be talking about silver and silver prices. And generally speaking, I don't really talk about silver prices. I'm not one of those silver pumper channels where I've got my mouth gaping wide open, all dramatic with my chin on the floor or anything like that. But I got to tell you, I'm seeing some signs lately in the news. That's right, in the news about silver price and what might happen soon. Now, before any of that, if you're new here, don't forget to like, share, comment, and subscribe. We're trying to reach a bazillion subs. It's actually a really big number. In fact, it's ginormous. Also, we're always live, never edited, and always unscripted. I never know what I'm not going to say. Now, let's bounce over here to moneymetals.com. Silver, gold, platinum, palladium, copper, all of them up right now. So gold's up 1365 to 3376.20. And remember, on the 24th, that gold coin comes out, and this price here is going to have a lot to do with what we pay for that gold coin. Silver up 23 cents at 38.59. Platinum up 16.25 to 14.62.40. Palladium up 23.50 to 12.97.55. And Dr. Copper up a nickel to 5.63 per pound. Over here, you're looking at an in-stock American Silver Eagle, whose premium is $6.69 for the quantity 1 to 39. They have you paying $45.29. Now the buyback, that's the sell to them price, is $39.87, and that is definitely above the silver spot price at $38.60. Now next stop is going to be the Google machine, and we're just going to look up the generic term here, silver. Okay, and we have this from the Jerusalem Post 3 days ago. Silver lease rates surge to multi-year highs as market tightness builds. Market tightness, that's not a good sign. Let's see here. Let's keep on keeping on. Goodbye gold jewelry. Budget-friendly silver is now cooler, sharper, and more fashion-forward. So think about this. If there's industrial demand for silver, green energy demand for silver, jewelry demand for silver, because guess what? Yeah, gold is a little bit too much expensive, too much a drain on your wallet, basically, if you know what I mean here. It's quite something. And let's see, B of A, where does it say? Now this is 23 hours ago. So like I said, there's a lot of chatter going on with silver right now. Confirmed by Bank of America, silver soars and could be the star. Could be, you like that qualifier? Could be. It's a definite possibility of a firm, maybe. Yeah, could be the star investment through 2026 for its key role in solar and technology. And look at that, through 2026. That means all the way up into what, December 2026? That's a year and a half from now. So that's kind of what they're expecting going forward. Now let's go over here to the Google machine, and we're going to look up silver shortage for 2025. Even though there is no shortage, it does say tightness, and I think that's as a well, they're really closely related there. The silver market, and this is AI overview, by the way. The silver market in 2025 is characterized by a significant supply deficit. Meaning demand exceeds available supply. Now, that's been that way for a while now, right? For a few years. While the deficit is expected to be smaller than in previous years, it is still projected to be substantial. Marking the fifth consecutive year of such an imbalance. This deficit is primarily driven by strong industrial demand, particularly in areas like clean energy, electronics, and electric vehicles. And remember, if people, start switching over from gold jewelry to silver jewelry, well, what is that going to do as well? So there's industrial demand. There's some supply limitations because silver is generally not found and mined on its own. It's usually combined with other minerals and other elements other than just by itself. So silver is often a byproduct of mining other metals, meaning increased prices may not automatically lead to a significant increase in supply. So the tightness is going to remain. To the point where is it going to be in limited supply? Is it going to be a shortage? Well, it could lead to that, right? That's what they're worried about. Now, here's a deficit versus shortage. While the market is in the deficit, demand exceeds supply. It is not necessarily a shortage in the sense of immediate scarcity and delivery issues. However, the deficit is a concern for long-term supply. So there's also geopolitical factors. And here we go. Some analysts predict that the continued deficit could lead to higher silver prices in the long term, potentially reaching $40 or even $50 per ounce. And that's according to Reuters. But look at this. Are we almost at $40 per ounce? We could see $40 an ounce by the end of this week, couldn't we? And so, yeah, they're not wrong, I would say. Now over here to the Jerusalem Post. It says here, this is from July 18, 2025 by PR. Okay, title of the article is Silver Lease Rates Surge to Multi-Year Highs as Market Tightness Builds. There's that word again. And do they want to say supply? No, they want to avoid that word, I think, and that's why they're saying tightness. Silver lease rates surge above 6%, echoing platinum's pre-breakout spike. Well, what was that? everything just kind of refreshed, it looked like. Traders eye signs of a squeeze as silver tests supply limits. Spot silver near 29.50 an ounce. And I don't know if that's right, but sure, okay. Not maybe it's in a different currency. Who knows? It says here, silver markets are showing fresh signs of stress, as implied 1-month lease rates have spiked sharply to over 6%, reaching levels not seen in years, according to Bloomberg data. The surge mirrors a pattern seen in platinum markets earlier this year, where lease rates soared ahead of a significant price rally. So is that what they're expecting? I think that's what they're expecting here. That's what I would say. The lease rate, the cost of borrowing silver, has climbed rapidly since January 2025, pointing to tighter availability of the physical metal in the market. So the paper metal is there. It's everywhere, right? Just like savoir-faire is everywhere. Well, not the physical metal. Elevated lease rates often indicate increased demand from short sellers who need to borrow metal or a tighter physical supply. The writing's on the wall right there, folks. Lease rates moving up like this can indicate that holders of physical silver are reluctant to lend. You know, I'll finish my thought in a second here. Possibly due to strong industrial demand or tightness in supply chains, said Tai Wong, an independent metals trader based in New York, in a phone interview. And I gotta say, you know, and this is just from what I've learned personally speaking, if you don't have it, if you don't own it, if you don't have it in your hand, hold it in your hand, do you even own it? And what's the difference between paper silver and physical silver, right? Paper. It's just paper, right? And one's a real deal, has intrinsic value. The other one is just, well, yeah, it's paper. Remember that. And I know that it's a hard lesson learned, because I know I learned that lesson when I had invested in Credit Suisse Velocity shares. That was brutal for me. Now it says spot silver prices were last trading at $38.50 per ounce on Tuesday. There you go. That's the real deal. Having gained around 25% so far this year. Gold prices, meanwhile, hovered near $33.50 per ounce, up about 18% year to date. Both metals have benefited from robust investor interest and amid concerns over sticky inflation. That's right, lingering, right? And global geopolitical tensions. Absolutely. Nothing's changed. Nothing has changed. Ottavio Costa Tavi, a portfolio manager at Crescent Capital, highlighted the spike lease in rates on social media, drawing a parallel with silver's breakout earlier this year. And there's Ottavio. Silver lease rates are surging, just like platinum did before its major breakout a few weeks ago. He says, if you ask me, if it looks like a duck and it quacks like a duck, well, there you go. It's implied right there. Historically, spikes in lease rates can precede sharp moves in the underlying metal price. For example, during the 2011 silver bull market, when silver briefly traded near $50 an ounce, lease rates saw similar dislocations as market participants scrambled for the physical metal. According to the Silver Institute, silver demand remains robust, with significant industrial use in solar panels, electronics, and battery technologies. And at the same time, mine production growth has struggled to keep pace with demand, leading some analysts to forecast potential deficits this year. And we've already seen that. We really are. Rising lease, and you know, it's funny, they have these bold parts of their paragraphs in their sentences. Yeah, that's probably important, right? Rising lease rates are a clear warning sign that physical market is tightening, said Nikki Shields, head of metal strategy at MKS PAMP SA, in a recent client note. It's supportive backdrop for higher prices if this trend continues. And is there anything that's going to suggest that the trend won't continue? No, probably not. The sharp moves have drawn the attention of both hedge funds and retail investors, who are looking for signs of another squeeze in precious metals. As for now, market participants will be closely watching to see if the current supply-demand stress in the lease market translates into further upward momentum for silver prices. So I think a lot of the experts are forecasting a silver squeeze. And, you know, I'm not saying it's going to go parabolic, but it implies that we could reach $50 quicker, well, before we reach $20 per ounce. That would be something. And now let's keep on keeping on. And this was really interesting. This is from Kitco News. And this was just from a couple days ago by Ernest Hoffman. And I can't see. Let's see here. Yeah. It's published July 16th and updated July 16th over there. So title of this article over there at Kitco is Russia's central bank may be boosting silver prices through undeclared purchases. Yowza. And remember, when China started buying up all that gold over there for their central bank, what did that do to silver prices? Yeah, I would imagine that had an effect. All right, so I'm going to leave a link in the description for this particular video or article for the video. And it's up to you. You can read it or not read it, but I think that's probably the biggest and best, most important part of the story is that they're buying, and they're buying silver instead of gold. And how many people have changed their idea? And, a lot of smart people, a lot of smart investors, I think, were buying gold, but now the eye of Sauron might be on silver because gold is just way too expensive. But that doesn't mean that gold's going to go down or stay at this price right now that we're seeing at 33.50 or 33.77.35. We'll see how it plays out. But I'll tell you, something is up, and it's probably going to happen sooner than later, I would suggest. That's what the vibe is on all of these stories here. 23 minutes ago, 2 days ago, 16 minutes ago, and so on and so forth. Now, let's go to those plus ones. I've yammered for way too long on the silver pumping action. Now, this is the golden mean, and this is by Yosef Gaon. It says here, the golden mean is to love this world, do good in life, and to aspire to the world to come. That's pretty basic. It's pretty simple, and it's pretty amazing. It's kind of beautiful as well. Now let's jump over here to 3 Nines Fine 99.9 KOIN Coin News Radio. This is Black Sabbath with Ozzy at the helm singing Changes. That's a really cool jam. I hope you dig it as much as I do. Oh, I got to ask the question, if we see $50 silver, yeah, right, $50 silver, what's the mint going to charge for their 1 ounce silver coins, or even, their commemorative silver coins that aren't even an ounce, or 858 of an ounce, right? Think about that. That's not good, especially, since we've seen silver at what, $30, $35 an ounce. And where does that go from here for the United States Mint pricing? And would they even give us a price grid? Yeah, probably not. Now, with that said, I want to thank you all for coming. Thanks for dropping by. Don't forget to hit that like button. And if you do like what you hear and see, sub the channel. It's absolutely free. Stacker out.